Hi, welcome to the Market Alert for Wednesday, the 5th of August 2015. And starting off in the 5-minute chart, you can see in the pre-market session there, the market trading in a range of 50 points. We've got the 17,550 up to the 17,600 level there. And as the market kicks off, we see prices trading through this, then reversing through it. So bit of indecision at the start there, then you see two professional buying bars coming into the market, followed by an upthrust, then some selling back through. So a lot of volume in the first part of the session, and eventually the market just runs out of steam, and you can see this with the low volume here. So eventually the market closes back above the 17,600. We get a sell signal there at PTI, and we see prices start to move lower. The order's filled, and then we get into this sideways trading range again, and that's because we had only the one medium impact news item which came out more or less as forecast, and this gave the market no direction whatsoever. The good news in this trade is that we did have this resistance area here, the 17,600, that created a barrier for the market to move higher, and you can see the market coming up 3 times like a triple top situation there, and then eventually breaking down and heading down to the psychological level of 17,550, which we use as a target price, so around 24 points on this particular trade. The market then traded sideways, bouncing back up. We've got a couple of professional buying bars there, then a telegraph pole, and then the selling returns to the market, and we've got some selling here as well. Had you traded this one in the evening, which is something I tend not to do at the moment because of the market being so quiet, this did go on to make again about another 25 points before the market again found support down at the 17,500 level and then returned. So again, you can see how the market wants to constantly return to the upside at the moment, but is failing to do so. The market's gapped down on the overnight, heading down towards the 17,000. I just find the psychological level, so it's going to be 450, isn't it? Because that's 500. So the 450 level, and you can see how the market's come back to the 500 at the moment. I don't know what the reason for this is, but obviously there's some geopolitical reason why the market's done this. In the daily chart, an interesting picture is taking place here. Again, keep an eye on the volume at the moment. It's very high throughout every trading session, which has been unusual for the last few years, never mind anything else. And yet, in the last few weeks, we've got a lot of volume in the daily chart there. We've got buying pressure for yesterday as well, and we see the markets testing as the overnight prices indicate. What's slightly odd here is that the open tick actually seems quite high to where the market is in the daily chart, where you've got that gap. So slightly odd, I don't know why. But at the moment the market pulling back to the upside there just a little bit. In the news, there's a couple of news items at 3 p.m. today. You've got the ISM non-manufacturing PMI. This is out at 3 p.m, as is the crude oil inventories at 3:30 p.m, but they won't make too much of a difference to the market. That market has already lost 70% in the last year, and is like the rest of the commodities market at 13-year lows at this time. Right, a quick look at the implied volatility, which 12:05 for Monday. Tuesdays is probably going to show a slight increase, 12.26 indeed, and that's because obviously the market saw pressure to the downside, but there's some buying pressure supporting the market at the moment. So 12.26 for the implied volatility for yesterday's session there. Right, that's it from me for today. Right, that's it from me for today. All things being equal, see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.